Happy Monday, everybody. Happy Labor Day. It is currently September the 1st, 2025 at 8:52 p.m. Eastern. I was recently rewatching Breaking Bad, a show I absolutely loved when it came out. It was great writing, great acting, great storytelling. Loved the characters. Loved Walter White. Hank was he grew on me over time. Mike, you can't beat Mike. Jesse, I even like Jesse. So it was a great show. I think it was like 16 or 18 Emmy nominations. But anyway, I was rewatching the show, and I think episode one, Walter is diagnosed with a terminal illness. He was 50 years old. I think it was on his birthday. And it got me thinking. I was like, all the things that happened after that could have been avoided. Like it couldn't have it shouldn't have happened if he'd have had a life insurance policy. Now hear me out, right? So he was married when he was 34 years old. He got a new house somewhere between the ages of 34 and 35 because he wanted a stable environment for his son Walt Jr. Walt Jr. was born roughly when Walt was 35, and so all those things would have been a perfect opportunity to get life insurance. Like when you get married, that's a great time to get life insurance. When you get a new house, mortgage protection is a great time. When you have a new kid, because you get the obligations are going to be going on for at least 20 years. All of these times would have been great to get life insurance. So how would life insurance would have helped Walt? Let's take a look. Walt was making between $45,000 to $50,000 a year. Skylar was making between 15 to 25 as a part-time accountant. So their total household income was between 60 to 75,000. Adjusted for inflation, I think it's around 93 to 115,000. And then all of a sudden he got hit with these treatment costs, like the treatment that might work, might extend his life for 2 years. And that was between $170,000 to $200,000, according to the people who are nerdier than I am on the internet. That was a total amount that he spent. So how would it have provided him with the money to cover the treatment with him still being alive? Well, I'm glad you asked. Well, if he would have gotten a 30-year term, like during any of these life-changing events, these big events like marriage, new house, or having a kid, he could have gotten a 30-year term for $59.60 when he was 34. 62.72 is a little bit more expensive when he was 35. That's just for $1 million coverage too. So if you had gotten that, and he was diagnosed with a critical illness, meaning 24 months or less to live, which he was, he would have been eligible for the accelerated death benefit, which would have been 75% of the policy, or $500,000. In this case, $500,000. He would have received that. He would have received treatment, which would have cost $200,000, and he would have had $300,000 left over, which means he could have bought Walt Jr. the car, and he still would have had enough money to, take Skylar on vacation, and still at least $250,000 left over. And when he did pass away, when he finally died, which I think the relapse 5 years later, I don't think that was treatable, then his family would have received an additional $500,000 remaining of the policy. So if he'd gotten life insurance, 221 people would still be alive, including him, which I think is a big deal. So if you don't want to cook meth, get life insurance. Thank you.